Hey everyone, bear markets typically have a couple of stages to them, and in fact specifically I think more like 3 stages. And so I brought along a couple of charts to maybe contextualize where we are right now. Essentially the 3 stages are where the initial bubble kind of bursts. I think we've had that. Then the second stage of the bear market tends to be where economic growth really starts to deteriorate, and I think we're starting to see that now. I'll show you a chart. And the third one is essentially where everyone just basically gives up or capitulates. Let's have a look at the chart number 1 that I brought along, and this is a very simple chart, but it's an important chart, and it's one that I've been alluding to now for a couple of quarters that I think it would happen, and it's the ISM Manufacturing Index. This essentially just tracks manufacturing within the United States. And usually when you drop below that 50 point, and we have now done that. In fact, we just got another data point last week getting us from I believe it was about 49, actually exactly 49, down to 48.40 now. Usually when that happens, we tend to see somewhat of an acceleration in the deterioration of the economy. And along with that, when that tends to happen, we also tend to start to see the yield on shorter-term treasury notes start to come down. And that's the second chart that I brought along that I want to show you. And we can see that the I should do this on the 2-year note. I have the 10-year note here, but this is a chart of the 2-year Treasury note yield, and you can see that obviously we had a massive increase in the cost of capital due to the Fed hiking rates from essentially almost zero in the summer of 2021 to just a couple months ago in November of this past year, almost 4.9%. And usually when we start to get to the point where the economy starts to slow down, and I think that's happening right now, the yield on the 2-year starts to moderate or mean revert, and I do think somewhere around 2.5%, maybe even 2% is quite reasonable to expect. So those are the 2 charts I want to leave you with. I also, by the way, think this is the best trade this year. That's maybe as an aside, to be long the 2-year Treasury note this year as the economy starts to slow, inflation starts to moderate. Ultimately, 2-year yields will go higher again, but I think right now, as we start to get into the second part of the economic slowdown, the recession part, this makes a lot of sense. I hope it helps. I hope you're well, and you had a good start to the year, and talk to you real soon.